Hi, this is Jen again. This episode, we're going to touch on the market sentiment and the market trend after the recent cooling measures. Okay, let's touch on the market sentiment. Okay, a report or a study done by the NUS Real Estate recently did a survey among the senior executive of real estate. Okay, this is what they think. They feel that currently it's very positive for all sectors, including office, residential, hotels, industrial. But in the future, there are feelings that the office hotels will be doing very well. And for residential, they only feel that the prime residential will be doing well. But for the suburban residentials, they feel it's not going to do too well because they have a negative 19% on the future net balance. This is what they thought and how they feel because of the rising interest rate, the inflation's rate, and of course with the these property curbs. Alright, so let's move on to see the hard facts and figures. Okay, first I'm going to touch on is the interest rate. Recent report says that the inflation is slowing down. So it's indications that the inflation is cooling down, and that's why the Federal Reserve may review their interest rate increase. The next inflation report is due in December 1st. So likely in December, they're going to increase again another 0.5%, but it's a markdown from the 0.75%, which they have been doing consecutively 4 times. Okay, so that is to say, we may be looking at some positive news in the near future. All right. So, but because of due of this interest rate increase during the 30th of September, where the government comes in and then raise the TDSR, which is the total debt servicing ratios, raising from 3.5 to 4%. Okay, but the bank themselves had also self-regulate themselves. They're not only using 4%. Some of the banks has raised their interest rate slightly higher than what the MAS is actually introducing. Okay, for DBS, they are using 4.25%, and OCBC, they are using 4.5%, and HSBC is also using 4.5%. So what does it mean? It means that your borrowing will be further reduced. You will be affected. That means to say you will not be able to get too high a loan when you're doing a purchase. So what about the sales transactions? Okay, let's dive in. You can see this chart. There is a big drop of transaction volume in September into October. The biggest drop is actually the OCR, which is about 91.3%. So what happened? Is it because the buyer are not buying? Actually, it probably spells a different way. In October, new home sales, excluding EC, actually dropped 68.84% month to month, and they only sell about 312 units. This is the lowest transaction volume compared the last time was April 2020, which circuit breaker was imposed. Okay. This is not because there's no buyer. This is because there wasn't much new launch in October. Okay. Remember a few months ago where we did a video, at that time we were saying the post-launch units, available units was almost about 14,000 over units. Today, by end of October 2022, there's only left 2,031 units. And in fact, people are still buying. Foreigner and Singapore PR especially has snapped up lots of units in the CCR and RCR region. But we see a drop of Singaporeans buyer. Okay, we can see that CCR showed the highest number of transactions for the month of October and even in November. Okay, new benchmark prices was set at CCR project. Example like Leiden Green, it has went up to 3,133 per square foot, and the M has transacted at 3,193 per square foot. There are also new benchmark price in Pullmans and also Perfect 10. So these units are all snapping up by the foreigner especially. On to resale market, where we see most of Singaporeans buyers here. Okay, the resale transaction volume has actually been slowing down, maybe because the Singaporean buyers is much affected by the hike in interest rate, the inflation rate, and of course the recent property curbs, right? On the other hand, they are also slowing down because also the high expectation from the seller. The seller are still very optimistic, so they actually has been asking above the bank valuation or the valuations price. So I think Singaporean buyers are finding it hard to basically take it. They are taking a wait and see attitude, And because we're also going into the last months of the year, more will be traveling. So they probably want to wait for the dust to settle down and see what's going on maybe early next year, and they will do some take and probably will react to that. Okay, in October, the most vibrant market is the EC market. Okay, Coupon Grant was launched in October and 73% was snapped up on the launch day itself. Okay, the second timer, which was actually allotted only 30% during the launch days, doesn't have a chance to come in until recently, which is on the 26th of November. This was open to them and it was snapped up totally. So by 26th of November, Coupon Grant was fully sold. Okay, this indicates a very, very high interest in the market for EC. So the next launch of EC will be TNET, which will be soon. It's actually going to be this Saturday. We'll probably come back to you and tell you what is the result, but we are going to expect a very, very good take-up for TNET itself. Okay, whatever is left in the market for EC, you probably want to look at North Gaia, which is also selling and getting a very healthy sales transactions recent 2 months. Okay, now we come to HDB markets. Okay, remember the new pooling measure is for the private owner. When they sell, they are not able to buy in HDB immediately. They have to wait out for 15 months. Okay, this has affected the HDB transactions. There was a drop of about 25% from September into October. But prices still holds very strong, and in fact probably a slight increase in the HDB price in October. Okay, and then we are coming into the rental market. Okay, rental market is totally crazy, still on the high demand and very, very, very low supply. Okay, due because a lot of properties or project is still has not got their TOP approval yet. Because we heard also the authority is also being held up with long list of this project waiting to get their approval. So expect the rental to go strong into the next first quarter or even the second quarter of 2023. So we come to the end of this video. Okay, what's my opinions and basically what is the forecast for next year in 2023? All right, my view is the price will still stay strong. That's because there is still a shortage of supply, especially new projects in the market. So as I mentioned, 14,000 over units we can actually absorb in a year, but we absorb in 5 months. Now we left only 2,000 over units. So there's not many new launch going to be in December. Okay, but lucky next year there's 40 over new projects coming in. So generally, you will have more choices in next year, 2023. But do bear in mind, a lot of Singaporeans here are already like holding back in buying. But you must also notice the foreigner and the Singapore permanent residents are not stopping their purchase. They will still continue to come into market in Singapore due to because the Singapore economy is still doing okay. And a lot of these are very affluent investors, which are not likely to be affected by any financial hurdles. Okay, so if it's within your budget and it's still within your means, you probably want to start do your research and start coming in. And maybe when there are more choices next year, you can come into the market. So with this, I end my video. I hope you can tap onto the subscribe button and click onto the buttons, the bell signs for the future notification of our video. And if you do have any comments or any suggestions, do put your thoughts in the comment sections below. I'm Jen, Jen Tan Property. Always love to hear from you.